Welcome, fellow speculators, to the Speculator's Edge, where super performance begins and opportunities await. My name is Berg, and I am the founder of TSC. Are you ready to achieve super performance? Well, today I'm going to show you how you can achieve super performance and make some serious money with stocks AX, CDNA, and DLTH. I'm going to go over some annotated charts on a technical theme, and then flip over and go over the fundamental side of these stocks. So before we dive in, please subscribe to my YouTube channel here at TSC. You can click on the TSC logo in the bottom right hand corner of this video. Like the video and leave a comment, and I want to thank you for your support and for watching the video. I hope that you find the information supportive and exciting and enjoyable. So before we dive into the video, this video is for educational purposes only. Do your due diligence before venturing off into stocks, because stocks are risky, okay? It's your duty to take responsibility for your own actions. And these are not recommendations, by the way. So let's go ahead and dive in. We're going to go over AX is going to be the first chart that we look at, which this is in the sector of the financial, and it is banks. This is Axos Financial. Okay, so when we're looking at the chart, what we want to see is we want to see a prior trend, and we want to see a prior uptrend of at least 25%, okay? And that means from low to high, okay? So in this run, as you can tell, the moving averages, all the long-term moving averages, even the shorter-term moving averages are being pulled up, okay? And we are entering into what's called a stage 2 uptrend, which is an accumulation phase where major institutions are buying this stock. And the next thing that we're going to look for is we're going to look for the base and what base this stock is in the stage 2, and then we're going to look at what the pattern is within that. And chart patterns are very important. If you don't know anything about chart patterns, I'll be talking about them more and more as long as you follow the videos and you see how I annotate the charts. It's very organized, so you'll get the idea on how to spot chart patterns and figure out what chart patterns are. But if you want some guidance on that, there's several books out there from, let's say, like Mr. Bolkowski, really good with chart patterns. There's a lot of other people out there that do the chart patterns and, you know, give you information on that. You can look on stockcharts.com and figure out what chart patterns are. So what we're looking for, the next thing, the third thing that we're looking for is the base and the pattern. So in this stock, in AX, we enter into a secondary base, which this is it, and then we enter into what the pattern is a rounding bottom, okay? And rounding bottoms are the likeliness or the probability of them actually moving up from the base or from that pattern are pretty high, substantially high, especially when it's in a secondary base. So what we're looking for next within this base and this pattern, or within the stock price itself, is we're going to look for low volatility. And low volatility is just a contraction in price itself. So as you can see, this stock within this base, where this red circle is, you can see that there is a lot of price contraction. There's low volatility, okay? This is a nice coiling phase right here. It's nice and tight. It hugs on to the 50-day moving average, and not only that, you know, there's some shakeout points within this 50-day moving average where institutions are literally shaking some of the weak hands out and getting rid of that and taking some market share right here. And so also what we're looking for is we're looking for the price to be at or near 52-week highs. The reason why is because when you look to the left, there's not much supply. So whenever there is good demand or sufficient demand to meet that supply, the stock doesn't have much resistance to move. Okay, so it can literally move big. Okay, it can move in a big way. So when we're looking at this, there's some tightness in price right here at around $48 or so for the last, I don't know, 4 days or so, 4 or 5 days. And what we're looking for next is we're looking for volume. We're looking for volume dry up within the base, and we're looking for volume, large volume or heavy demand coming out of the base. But with this stock, as you can see, the volume dries up. It dries up substantially in this base, which keeps the price nice and tight, low volatility. And what we're waiting for now is volume to increase past this 50-day moving average. Okay, we're looking for larger volume to come in, but on a technical theme right now, this stock is meeting what's called my super pivot, which if you go to my Patreon site and subscribe to one of my tiers, you will get all that information and learn about what a super pivot is. It's pretty fascinating. I've done a lot of work on this. I've been doing a lot of work, a lot of research. So this super pivot, where it's being breached at, is at $49.09, which is right here at this high. And of course we got a breach today, and we made a high of $49.40, which is good. So right now we are at the price is going to be at $49.21. If you want to wait until the close or near the close to wait for it to hold that $49.09 or that resistance area, that would be logical. It would be a good buy now, in my opinion. So like I said, I'm not recommending this stock, but the chances of this reaching up to $54.36 is pretty high, the probabilities. So you can make a decent profit right here, 10 to 15% if you take the shot now. Okay. Also, the relative strength index, the performance of this stock is good as well. Of course, we made new highs right here with the RS line, which that's a good sign as well, showing that there's strength within this stock. So let's move on to CareDX, ticker symbol CDNA. This is in the healthcare sector, and the industry is healthcare providers. So what we have here, again, we have the prior trend, which is greater than 25% from low to high. Okay, and we are of course in a stage 2 accumulation phase here. Institutions are buying. We got nice heavy volume all around here, nice heavy demand. Okay, and so the next thing that we're looking for is we're looking for the base and the pattern within that base. Okay, so practically what we have here back here is we have a primary base which shoots out, and then we move up, of course, greater than 25%, and we form what's called a secondary base. Okay, and what we have within this secondary base is we have a nice large, and on the time frame and lengthwise in time, we have a very nice double bottom right here, or you can see it as a nice rounding bottom right here, and that goes from the lows all the way down. As you can see, after the lows hit the 200-day moving average right here. Okay, also the same thing with the double bottom. The lows hit the 200-day moving average and bounce off, and of course there's some heavy demand when it bounces off. So now what we're looking for is to see what is price doing here within this base and within this pattern. So within this base and within the pattern, we do have low volatility right here. Okay, nice tight price action all in here, which is the middle or the peak of that double bottom. The double bottom literally looks like a W. Okay, so we're looking at that peak in the middle of that W. And if you look to the left and you see, well, you can see that there's nice tight price action, so there's low volatility and price drop. Okay, so not only that, as we're breaking out right here at this pivot, we're near 52-week highs. Again, like I said, this is where supply literally gives and demand, when demand comes in, it can move past that resistance area, and the price can move dramatically in your favor, okay? So now we go on and we look at the volume, and we can see that we have volume dry up within the base and within the pattern. That's good. And we have another volume dry up as it's coming out of the base, and we're also having increased volume on today as well. It's making it over that 50-day moving average, and it's showing it's increasing out of the base. Excellent sign to make some serious money here. So the super pivot, where the super pivot would be at $82 even, and it was breached today. We made a high of $90.14. So right now we're trading at around $88.67. It would be okay if you want to buy right now. If tomorrow is a little sour in the market, expect it to kind of pull back to that resistance line, this purple line here, and if it fails that and breaches this low right here within this price right here, and this price range right here for the last several days, if it fails right there and it breaks down, this stock will probably I'm not going to say will, but it could possibly melt down. Not for sure, don't know that. The markets, you can't predict. There's no forecasting in this. This is all trading in the present, okay? So you just got to trade today, okay? So this stock is looking good. Like I said, here in a minute, I'll go over the fundamental themes on all this, on these stocks, and show you. On a relative strength basis, this is a leader here, and it's, of course, we made new highs on the RS on the relative strength line, so we're good. If you want to take the trade now, take the trade. So let's go ahead and move on to Duluth Trading, DLTH, which is in the sector of consumer discretionary and is a apparel retailer in the industry, okay? So what we have on the chart, of course, we have a prior uptrend of greater than 25%. We're reaching, of course, we've reached into a stage 2 uptrend, and the beauty on this stock is that the base is a primary base, meaning this is the first base of this price run, okay, of this major price run in the stage 2, okay. So catching this right it can make you a lot of money in the short term and the longer term, okay. So within this base, within this primary base, we form what's called a cup, which looks like a cup with a handle, and here's your handle right here, okay. Your cup, of course, your bowl is right here, and your handle right here. Now what we're going to look for is we're going to look for price, we're going to look for low volatility, and we're going to see where price is relative to its highs, to its 52-week highs. And of course we have low volatility within this price range right here within the handle, and the price is, of course, breaking out to new 52-week highs, which is an excellent sign. We go and look at volume now, and we can see the volume dries up within the handle, which means volume decreases within the handle, and then volume is now starting to increase while breaking out of this base and pattern, which is an excellent sign that we have institutions coming into this stock, okay. That's very supportive, and this stock could literally get a move on from here. So the super pivot, where this is going to be at, it was breached at $17.35, which of course is this purple line right here. We made a new high, or we made a high, a 52-week high at $18.46. So this would be an excellent trade to consider today. The relative strength line is it's okay. It's not bad. I'd rather this be at new highs as well, or at 52-week highs, but it's okay because it's still a strong stock and actually a really strong industry. So let's go ahead and go over the fundamentals. We're going to start off with Axis, and we're going to look at this here. So it has a composite rating. I use IBD, Interactive Brokers. I meant not Investors Business Daily, excuse me, to find the fundamentals, of course, or get my fundamental data. So practically, like I said, the composite rating is at 81. And so practically what this company does, it operates as the holding company for BOFI Federal Bank that provides consumer and business banking products. It is in a strong industry group, which is at 72. The rating is at 72. The relative strength rating is a B, which is really good as well. So the fundamentals aren't so great. The earnings per share percent change last quarter was -2%. Not so great, but the earnings per share rating is pretty good at 80. Be aware the earnings date is July 29th, so if you're holding until then, just be careful on your trade there. You might, if you're in profit territory, you might want to take some of that profit off the table. Before that, at least, you know, half your money off the table before that. Okay. The 3-year earnings per share growth rate is at 16%, so it's not so great, but the consecutive years of annual earnings per share growth has been 4, so 4 years of it. That's pretty good. The SMR rating is A, which is good, but the 3-year sales growth rate is not great. It's at 13%, and not only that, the sales percent change last quarter was only -17%, so not great there at all. Annual pre-tax margin, though, is excellent at 37.4%. Okay, so we do have a little bit of accumulation in this stock. Percent change of funds owning the stock has been 6%. And the quarters of increasing fund ownership has been 2. So not too bad on that. By far, this stock on a technical theme is excellent, and also with higher interest rates or yields increasing, financials could be a big winner, you know, in the short term. So look at this stock, pay attention to it. If, like I said, I'm not recommending that you buy it, but if you look at it and you want to buy it today, would not be a bad trade. So let's go over CDNA. Let's see what the fundamentals are on this stock here. So we got a composite rating of 84. It is number 5 within its industry. The industry group rank isn't so great. It's at 128, which is not so great. But the group relative strength rating is a C+, which is not bad. But so let's see this company here, CareDx, develops diagnostic surveillance products used to monitor organ transplant recipients. Okay, the fundamentals of this stock are actually really good. The earnings per share percent change last quarter was 1,300%, massive percent change. Not only that, the last 3 quarters average earnings per share growth is 600%, which is awesome. This is something that we want to see. This is great news right here. And not only that, the last quarter percent earnings surprise was 216%. So the 3 years earning per share growth rate has been 324% with 4 years of annual earnings per share growth rate. Okay, this is excellent. Excellent earnings. The sales has been 76% change last quarter. The 3-year sales growth rate is at 62%. Fundamentally, this stock is sound. It's good. So what we have is 9% change in funds owning the stock with 4 quarters of increasing fund ownership. It's telling you there is accumulation within this stock. So by far, this stock looks primed and ready to go. So like I said, I'm not recommending this stock, but if you want to buy, I'd buy it now. So let's go ahead and move on to the last stock, which will be DLTH, which is of course Duluth Trading or Holdings. So Practically what they do markets clothing, tools, and accessories for contractors and serious do-it-yourselfers. It is ranked 14th within the industry. Okay, that's okay. I mean, the industry group rank is 12, which is excellent. Awesome industry right now. The group relative strength rating is at A+. Composite rating is 86, which is good. This one also has excellent earnings. We do have the earnings per share rating is 56, which isn't great, but the earnings has been great. Earnings per share percent change last quarter was 104%. The last 3 quarters average earning per share growth rate has been 97%. Okay, and the last quarter percent earnings surprise was 110%. So this stock is pretty good fundamentally. The 3-year earning per share growth rate is -7%, which isn't great, and it hasn't had any consecutive years of annual earnings per share growth. But the estimated percent change for the current year is 67%, which is good. The sales is okay at 21%. The 3-year sales growth rate has only been 9%. Not so great right there on the sales, but it is sound on an earnings per share, and it is sound on a technical theme. So this stock, like I said, could be primed and ready to move. Do your own due diligence when you're buying these stocks. So before I end this video, I want to thank you for watching and supporting the Speculator's Edge. I hope you enjoyed and found the material informative. Please subscribe if you haven't already. Drop a comment and let me know what you think of the video, and if you have any questions, I'll be more than happy to help. I've also posted a link to my Patreon site down below of the video. You can subscribe to receive an exclusive list of stocks on a daily basis that are primed and ready to make you a fortune and start achieving super performance now. So if you haven't already, check out my intro video here on YouTube. This will tell you it'll help you get a better understanding as to what I have to offer you. So I want to thank you again for watching, and here at TSC we trade in the present, study the past for knowledge, and follow the process of trading to build our future. Opportunities await, my friends. Thank you again for watching.